right, good morning, ladies and gentlemen. Today is September 21st, 2022, and back with another Wednesday show. And today's the big day. Today is the Fed announcement on interest rates, and the consensus is that they're going to raise 75 basis points on top of the 75 they raised at the last two meetings, 50 prior to that and 25 prior to that. So this is the this is the going to be the third 75 basis point rate hike. And of course, there's the idea out there that they could go 50 or go 100 or whatever, but the consensus is 75, and that's probably what they'll do since they've been pretty good at telegraphing their intentions ahead of time. And the consensus also seems to be that the market will rally afterwards because it has. The market's rallied the last, geez, all the all the other rate hikes. The market rallies afterwards. Put it that way. So it'll be interesting to see what exactly happens. And one of the other things, which we'll look at in a minute here on the chart, is the negative reaction to the last CPI number kind of sets everything up for sort of a relief rally. But hey, you never know. I mean, it's literally everybody thinks that the market's going to rally after the Fed raises rates again, and it's going to be interesting to see what happens. And the 75 basis points is probably that's what everybody thinks they'll go, and so I would say that they probably will. And so, whether it's priced in, it's obviously going to be all about what Powell says when he's answering his quick Q&A, right? And so that's the big thing. There's the initial reaction to the Fed rate hike, and then there's the subsequent reaction to what he says, the speaking part of it, and that's where things tend to get wild. So I mean, there's really no telling. I mean, if you look at the chart, it's kind of set up. I'm looking at an hourly S&P chart. It's kind of set up for a big rally. And so, the over and under right now is around 4,000. Before we get into the charts, let me just pull the chart up here. So, we're in there's the CPI number I was talking about. When this CPI came out, you had a rally into the CPI number, and then it came out hotter than expected, right? All day long, I kept hearing and seeing hotter than expected, hotter than expected. So, um, this big rally back here in July, from July to mid-August, was sort of based on the idea of a Fed pivot, right? The Fed pivot. It was clear that, the economy was slowing down a little bit, right? We've had two negative quarters in a row of negative GDP growth. That's what I'm trying to say. And of course, they're saying that doesn't mean we're in a recession, and which is kind of funny. And the CPI number coming out, is it next week or? Anyways, we're getting another CPI number soon, and I believe that GDP Now Atlanta Fed thing is showing like 0.3% growth or something. I mean, something real minuscule. So there's the potential that we could be looking at a third quarter in a row of negative GDP growth, which would be interesting. There's so many pieces to this puzzle right now, the macro picture, that it's really difficult to know how it plays out because there's just so many factors that are all in play at the same time. I was actually talking to a friend of mine about all these things. He brought something up that was interesting that I hadn't really thought about, but he said something like, oh well, the powers that be do not want to let this market fall apart, going into the November elections, right? And I hadn't even thought about that. And so that was one of the things that wasn't sort of in my thinking, but and then we talked about how the rising interest rates have affected home prices, or not home prices, but the the mortgage payments, right? Which is astounding. I mean, mortgage rates, a year ago were 3%, and everybody, most people locked them in there. Now they're up 6 and a quarter, something like that. So that's going to have a big effect because used to be, you buy the median home price in America, your payment was, 12, 1,300 bucks, and now it's like, 24, 2,500. So that's another piece of the puzzle that and you hear a lot about the housing market, that type of thing. So that's huge. That's a big thing. Commodity prices are way down off of the highs. That's another sort of thing. There's a lot of people out there that say that, basically inflation has peaked, right? And uh, and of course, there's the CPI and the PCE and all that. And quite frankly, I mean, inflation has come down the last couple of CPI releases. So I've found this chart that I like to bring a chart to the show, but I found this chart which I thought was fascinating because it's the CPI month by month going back to 2013. And so to see it, to see that here all in one sort of view to me is kind of interesting. And so um, And so, interestingly enough, so like what the pandemic sort of kicked off here in like the pandemic kicked off in I would say February, March of 2020, and you can see the inflation rate for 2020, and interestingly enough, you can see so the rate of inflation (CPI) really started picking up here in the spring of 2021, and this is where I mean 5% um, was pretty outrageous. The funny thing is all back in here, right? Like 2016, 17, 18, all back in here is where the Fed would basically say, hey, there's no inflation. We need to get the inflation rate up. This is a problem. Thing about inflation is it compounds, right? As we all are probably well aware at this point, is that you know, like the price of something. If the price of something goes up 5%, no big deal. And then the next time it goes up, you know, so 6%, well, that's on top of the 5% it already went up. And so then, the next time the price goes up, it goes up, 7, 8%. That's on top of the two prior price increases. And so, most people don't kind of do the math on that, but obviously anybody that goes grocery shopping knows that the prices at the grocery store. I mean, I mention this a lot, but it's true. It's like the number one thing plaguing America is that the price of everything keeps going up, which obviously is all throughout history, inflation is a monetary phenomenon. And so basically this inflation is the result of an increase in the money supply, which the Fed went crazy and threw all this money into the system during the pandemic. And so, over the last several years, I don't know the exact I don't keep the exact numbers in my head because they're not that important. It's more of a concept. Over the past, several years, the money supply has doubled. And so, all throughout history, and that's what gets me. And the other thing to notice looking at this chart is everybody likes to pretend that inflation is a recent phenomenon. Like all of a sudden, and all of a sudden, inflation just popped up out of nowhere. When I mean, you can look back in here, and I mean, yeah, sure. I mean, these are modest, a couple of percent, 2% or whatever, less than 2%. That's modest, but at the same time, I mean, it compounds and it adds up on itself, and so It's not a good thing. It's a bad thing because the old saying, once you let the inflation genie out of the bottle, it's hard to put it back in. And so that's what the Fed is finding now. So anyway, um, you know, the language of the Fed tends to be, in my opinion anyway, recently tends to be more hawkish than and then Powell himself. It seems like if the S&P's over 4,000, he's dovish, and if it's under 4,000, or I'm sorry, hawkish, and if the S&P's over 4,000, that he's dovish, right? And so, I mean, we just had this sell down here from 4,300 to, geez, like 3,850 or something. So, um, won't surprise me if if won't surprise me if he's a little bit dovish or whatever, and obviously it's going to be the same rigmarole, data dependent, nothing's ever on a preset course, yada yada. So the same as it always is, but this little sell off after the CPI here. And there's a couple of spots on the chart, these big long range down days. There's a couple of them on this chart that this one for sure. I'm 100% positive that this particular one back here in April, that big reversal day and sell down was a direct result of Powell speaking hawkishly. So, yeah, that's going to be the interesting thing. Is here's the thing. It's not about whether they raise 75 basis points or this and that, and it's not even about what he actually says. It's the reaction to the announcement. And so um, you know it's set up for a rally up to it's set up for a rally up to at least the highs of these past couple days, but you just never know, right? I mean, technically, and this chart's not even going back all the way to the highs, but we have this trend line drawn across the high here, and then we have this trend line, and this is kind of interesting because this trend line got broken, right? And that was sort of the big pattern everybody was watching, and so hey, maybe we get a relief rally up to the underside of that. I don't know. Oh, didn't mean to draw that. So, and then now I suppose there's another trend line you could draw like this. So I mean, the thing about trend lines is you know they get broken, and then it's all just about perspective. So this breakdown here out of this sort of big triangle is kind of let me see how I can see. This is the problem with drawing stuff live on the show here. Let's see if I can. There we go. So let's just say we had this big triangle here. This big triangle, and then we've got this, this sort of trend line here. And so, yeah, I guess, I suppose the underside of this triangle, there's the 50-day moving average, there's the 200-day. You can't even see the 200-day moving average because it coincides with this overhead resistance here. So that's kind of interesting. A little bigger picture here, a little bit further out picture. Go back to the beginning of the year. Still an obvious downtrend in the overall market, and quite frankly, I mean, the market's a lot closer to these lows than it is. Let me get rid of these other ones here. Yeah, I find that too many trend lines, too many indicators, too much stuff on the chart has a tendency to sort of throw things off. As you guys know, I like simple. I like simple and clean, and that's part of the reason that it's part of the reason that my charts aren't all marked up with yeah, I had a chart, that had like trend lines and a couple of different levels. As you recall, I had last week I had like this low here around 3,900 was kind of the big line in the sand. And of course, I mean the market right now 3880 is normal price fluctuation puts you back at 3,900. So um, I saw something this morning where to the effect of the institutions were basically gonna cover their shorts this morning ahead of the Fed meeting, expecting a rally. So it's gonna be darn interesting to see. Um, S&P's up 0.6%. So any more like a 1% price fluctuation is almost just normal volatility. As a matter of fact, yeah. So I mean, like look at yesterday's what looks like a little, fairly narrow range bar. Um, well, of course, it gapped down, but at one point, it was down over 1% yesterday. So anything less than 2% is not really much of a move. So it's going to be interesting to see what happens here. Basically, you get 2 or 3 days up movement like we had back over here couple of weeks ago. We had that sell off and we had that rally right there, and four straight up days. Everybody got all crazy bullish. It seemed like, and I don't know. It's the sentiment is something that's really weird these days. The sentiment literally flips on a dime, right? You get you get 4 days up like that, and all of a sudden everybody's acting like the market's just gonna rip straight back to the highs or whatever. And I mean, to me, you got to look at the chart for perspective. That's the only way to know anything, and especially with individual stocks too. I look at the chart, that gives me a lot of perspective. And boy, I looked through a bunch of charts last night, and I got to tell you, the damage to individual stocks out there is just astronomical. We all know, the high flying momentum stocks have been crushed and this and that, but like Nvidia and AMD and some of these things, these are amazing to me. I mean, it's one thing. Um, these are, well, put it this way, like the chip stocks are basically, let me go back to, yeah, I mean, this one's still pretty much, there was the pandemic sell-off, which is just a blip on this chart. Although percentage-wise, it was significant, but it just blows my mind to see, these preeminent chip stocks down so much from the highs. I mean, this is obviously down more than 50%. Um, Intel is just incredible, right? I mean, Intel was, yeah, that's as far back as I can go on the Intel chart. So, Intel down more than 50%. Um, Facebook, which was one of the largest market cap stocks ever. Look at this. It's called Meta now, but obviously Facebook. Look at this. It's down poking around at the lows, the pandemic lows, where the market was down 30% here. That's incredible. So, and of course, so goes Apple, so goes the market, as they say. And yeah, this is probably the most important chart in the whole market. Is what is Apple doing? And amazingly enough, since late June, it rallied practically back up to the highs. So it's kind of in an interesting spot right here because you have the 50-day and the 200-day moving average like about to converge right above the current price. So that's kind of interesting. Um, just real quick look around. I mean, there's not a whole lot. There's not a whole lot to talk about ahead of the Fed, because that's the big story today, and there's no telling how the market's going to react. So, like I said, the consensus is 75 basis points, and then we get a market rally subsequently. And it seems to me that it'll take a couple of days for the dust to settle. This is a pretty nasty pattern here. I mean, I think back, I think back to all the people I see on CNBC just over and over and over all this period of time. They love the financials, financial professionals, money managers and these talking heads and all that, stock pickers, all these guys, they always love the financials. The only thing I can figure is that it's like one of the safest bets to be bullish on the financials because they just don't move that much, right? I mean, if this thing went from 32.90 where it is now to 30, that would be like a collapse. And it's still just a couple of bucks, 10%. So it always seems to be a safe bet. But I mean, that is a pretty nasty looking sort of rounding top there. So um, XLK, which is technology, rising interest rates and the strong dollar, which is another piece of that puzzle I was talking about earlier. And there's a lot of them, but there's a lot of really historic things going on, right? Like the strength in the dollar is just against all the other currencies is phenomenal. And I don't even want to get into a conversation about that because I'm not that knowledgeable about it. But I do know this is that, eventually if the dollar weakens, um, it seems to me that that would be inflationary, right? I mean, we're lucky that the dollar is so strong because most of the stuff we buy is imported, and so that's I don't even want to go there, but anyway, so technology has really gotten crushed. Momentum, technology type stuff. I always look at ARK here, and you can see that this is my proxy for this is actually a good proxy for um, speculation type risk, right? And so I mean you can see it was over 150 here, and now it's 40 to 45 bucks. It's actually closer to these lows than it is even the recent highs here. So so yeah, you can see that ARK's an absolute disaster. Some of these stocks, like I think Roku is one of the stocks that, in the top 10, if not the top five. I think ARK's largest holding is Tesla, and and then you get these things like Roku. What an epic disaster! I mean, $500 to 70, just incredible. And that Shopify at one point in time here, actually a couple points in time, this looked like a beautiful sort of bottoming pattern, and it tried to break out over here. It was tempting, and then recently, all the way back down to the lows, and actually, ticked a new low here. And so, this is one of those stocks where you could say, hey, buy it around 30 and sell it around 40. So it's actually, I remember years ago there was something they used to advertise on CNBC called channeling stocks, right? And that was their whole concept was stock like this that traded in like a big channel. You buy it at the lower end of the channel and sell it at the upper end of the channel. And so, but I mean, just absolute disaster. Um, as is a lot of these stocks. And so let's look at the Qs real quick, see where we are here. Obviously all these things are in big downtrends. We just had a pretty decent down cycle in, obviously over the last, couple of months or whatever. And so, down cycles like this one from April to May, and then you get a pretty big, relief rally bounce. And so it wouldn't be a huge surprise to see a rally, coming off of this Fed announcement. So, they say the big thing this year that they love to say is that it's priced in, right? Everything's priced in already. And so what's priced in right now is what I said earlier, 75 basis point rate hike and I think what the participants want to see or want to hear from Powell is something about, something about when they're going to pause their rate hikes, right? Which I'm gonna get, I would guess, and I don't follow this stuff, and I'm not certainly not as knowledgeable about it as all these guys on CNBC, but it would seem to me that that there's after today there's going to be two more rate hikes into the end of the year. They would probably leave the option of, I believe there's November and December, right? So there's no October Fed announcement. So, my guess is their plans are 75 today, 50 in November, and maybe 25 in December, and then that's it. And then they're going to stop, right, and see what happens. And like I talked about last week, typically, any adjustments to the macro out picture, I should say, such as the idea that oil prices have dropped significantly is one thing. Rate hikes, that type of thing. I mean, they take typically 6 months to work their way through the system, and so that you can see what the effect was. And so this is going to be it's going to be interesting to see how things start playing out towards the end of the year. Um, half the people out there say we're in a recession. There's a lot of people that say the economy is great. These places, Jersey Mike's around here is paying 16, 17 bucks an hour for people to make sandwiches. Um, and a lot of places people talk about they go to their favorite restaurant and it's packed and busy, and there's people out spending money. So um, you could argue endlessly about how good or bad the economy is, whether in a recession or not. And so there's it's really difficult to gauge this stuff. And of course, the official numbers are typically meaningless, because I don't think anybody really trusts the CPI number. But then again, it is what it is. So anyhow, all I can say is that the market's clearly in a downtrend. We just, this little sort of relief rally aside, we've just had a pretty significant downdraft, and so I mean, there's no telling today. It's just absolutely impossible to, if the market has a negative reaction to Powell today, we could be down here at 3,800. If it has what I would call a normal to positive reaction, we could be up here at, I'd say 3,850, right? So, or I'm sorry, 3,950. So there's absolutely no way to guess it. Just based on this recent sell down and sort of this setup here, I would say that the more likely scenario is for the rally. And like I said, I'm kind of basing that off the idea that over the last, every Fed meeting so far or every Fed announcement, rate hike, the market's rallied subsequently. So it tends to sell off into the announcement and then rally afterwards. So that's probably what we should expect. We have a couple open trades. We had one that got stopped out. Just because it was we got this sort of cup up, and got long up here, and with the expectation that we were going to get some continuation, and then of course we get this pullback here and all that, and then this that CPI number, and I believe there was actually some company specific news here, which was, those things come out of the blue, but basically, as nasty as this year has been, with, lots of companies losing, significant amount. I mean, I saw a big list yesterday of, brand name stocks that everybody loved last year that were down, 40 to 90%, right? I mean, if you were holding a basket of, the darling stocks, the ARK stocks or whatever, I mean, some of those are just devastating. So anyway, long story short is we've been playing defense, and so been keeping the stops, you know, 10% or less basically, which some of these stocks they like fluctuate 10% within every few days. And so, but anyway, we still have a couple of open positions, and then I think after the dust settles, we may see some more come on pending. But basically, it's been a good year to play defense, not get real aggressive. A lot of so many stocks are in downtrends, and the ones that are in uptrends tend to act a little wonky. So everything's just kind of up in the air. It's a weird year, and there's handful of these guys that are still calling for a huge end of the year rally, right? Um, you know, it's just funny the same cast of characters that are always bullish are calling for the market to rally back up, hit new highs, early next year. So, and then of course you got all the stuff going on with Ukraine and Russia and that. So, it's one of the most turbulent environments that I can remember. I mean, the last time we had this much craziness all going on was 2015, 2016 maybe, or and the last time that we had the Fed trying to reduce their balance sheet and raise interest rates and all this good stuff was like 2018, which turned out to be a terrible year because the market sold off hard into the end of the year, and then the Fed did pivot. Right? That was the funny thing is that in 2018 they were, pretended they had almost the identical mindset to what they have now, and then the market tanked. And I'm gonna look at that real quick just for the fun of it. I'll just go to SPY. Yeah, 2018 at the very beginning of the year, market hit an all-time high, and it was up significantly. And I remember seeing all the stories about how January was so bullish that the market always has a good year when January's up, and then boom, towards the end of the year, kind of unusual because usually the end of the year is the strong, seasonally strong. And so 2018 was crazy, and I mean it sold off and hit like these lows like around Christmas or something. I mean, and I mean the Fed basically just did a 180, and they stopped their hawkishness. So anyway, yeah, the monthly chart's interesting to look at too. I mean, today's the 21st, so there's a little time left in this month, but it's going to be easy. I love looking at weekly and monthly charts to get the real sort of perspective on what's going on. So, um, if you draw some lines on this monthly chart, we're still kind of in, this big triangle thing here, and so I mean, you can clearly see. So it'll be interesting to see. Let's see how much time is left here. Yeah, there's like, a week and a couple of days left in this month. So it'll be really interesting to see if we close, if we have a down month or an up month here, right? And the funny thing is, the first 2 months down, and then up, down, up, down, up, down, and then here we are. So. Anyhow, gonna be a fun day. It's gonna be exciting. All sorts of stuff going on. One of the days where watch CNBC as much as I can with the sound off most of the time. But it'll be interesting. Weekly charts kind of so-so. One interesting thing about this weekly chart, and see, I don't know, for some reason, looking at the weekly charts, I just get a better sort of idea. Is I mean, look at last week was like a big bearish engulfing candle. If it was a candle, it'd be a big bearish engulfing candle. So, if we rally today, halfway up into that doesn't necessarily mean that everything's fine. Look at the prior week, right? We had a few down weeks, and then you get that sort of either short covering or people think, okay, well, we've probably seen the lows. Um, so anyway, yeah, it'll be interesting to see how things play out today, where we close, and then I'd say by Friday, the dust will settle, and so we'll see how things go. So anyways, thanks for tuning in. Have a better idea of what transpired next week, so I will see you then.